Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting on the weekly, as it's always good to zoom out at times, we have a 1-2-1-2 looking for a 3, 4 and a 5 in this scenario. The common target for your wave 4 is between the 236 and the 05 Fibonacci from the low to the high of this wave 3, giving you a target area between 63.3k and 53.3k on the logarithmic chart. And we are on the log chart because this is the weekly time frame that is preferred. And price also moved up 350 to almost 400%, and therefore it is good to use the logarithmic chart. The invalidation for wave 4 is the 0.618 at 49.3k. After this wave 5, we expect another bigger range to form in this yellow wave 4, and then a last push to the upside in the final wave 5 to end the bull market. The alternative, even more a bullish scenario, is a 1-1-2, 1-2-1-2-1-2, and we still have a bigger wave 3 to come. Now, in an impulsive structure, the strongest, biggest, usually most volume wave is wave 3, this one over here. And in this particular scenario, we are still over here, right? We're in the 1-2-1-2-1-2, and we still have that big move to the upside to come. The reason that this scenario does have some potential is because in the previous bullish scenario over here, wave 3 is quite short. Wave 3 here did not reach the 1.618 trend-based fib extension that you see over here, taken from the low to the high of 1 to the low of this wave 2. And this is commonly a minimum target for a wave 3, but we didn't hit it on the logarithmic chart. We only hit it on the linear chart, but as mentioned, the logarithmic chart is preferred on these time frames. So that is quite interesting, and that is the reason why I have another 1-2 on the chart over here. Now, the previous 1-2s all rejected or actually found support at the 0.236 to the 382 area, which is the reason why I have it on my chart as well. It is quite interesting because the common target area for wave 2 is the 05 to the 786. The 382 is usually a less common target, and anything above the 382 is quite rare. However, in a strong market, and in this case a strong bull market, this is an area we have to keep in mind. So that is why it is on my chart over here, 65.5k to 60.3k. The bearish scenario is a flat structure, pretty much the only scenario you can have at the moment, a three-wave structure, ABC, where this wave A is a WXYXZ to the downside, zigzag ABC to the upside in B, looking for a 5-wave down in a wave C. However, wave C is an impulsive structure, 1, 2, 3, 4, 5, which means that on the lower time frames, you like to see price moving to the downside as an impulse. Right, so we want to see that on the 4-hour time frame, the 1-hour time frame, this move to the downside has to be an impulsive structure. However, at the moment, this move looks much nicer and has higher probabilities of being a 3-wave structure and not a 5-wave structure. Second thing is that price now has hit the 0.886 of this range. If I drag it to the right side, you can see that price hit the 886, and the 886 is a very rare target for a wave 2. It is a common target for a wave B or a wave X, decreasing the probabilities. This is an impulsive structure to the downside, increasing the probabilities even more that this is a 3-wave structure and we are in a corrective range, still expecting higher highs. If we then talk about this range in more detail, jump to the 4-hour time frame, then you can see that this range recently has been very nicely respected. A bounce at the value area low over here, and then price moving to the upside, reacting at the value area high, and a bit of a retracement to the downside. We also lost the support resistance area on the chart, which is the white box over here, sitting between 71.4k and 71.8k. You can see over here it was support, resistance, more resistance, but we could not hold it as support over here. So this area is quite interesting. If price can move back above this area and flip it for support, then we can look for the highs, and then also the all-time high becomes very likely. But at the moment, we are ranging below this area. Now, if we then jump to the scenarios, then the first scenario over here is a WXY scenario where wave W and X are finished. W is a zigzag, and therefore in a wave Y, we are looking for a flat structure in a bigger sideways double combo WXY. Now, wave A here is a zigzag to the downside, and then we have wave B. The most common target for a wave B is the 1.236 to the 1.38, 73.5k to 74.6k. But as you can see, we did not hit that common target area. And this is the common target area for an expanding flat, A, B, C. A less common flat pattern is a regular flat, where the target for a regular flat is the 1 to the 105, and that is the area that we have hit. If we are now looking for a wave C to the downside, we need to see a quick impulsive structure to the downside. Yes, we are moving down. It's a little bit of a grind actually on the lower time frame so far. No very big moves just yet, but we need to see a wave C to the downside, which is an impulse, and then a 1, 2, 3, 4, 5 wave structure where you want to see the low of wave A taken. However, then again, this is a less common target for a flat because a regular flat is more rare compared to an expanding flat. So that is something we have to keep in mind with the local retracement that we see over here. If we do look at the support area down here for a wave C, the target area between the two 1.618s, then at the lower end of this target area you have a weekly gap that is there as a little bit of confluence for support, 59.2k, and also the target box down here around 62.4k is a nice confluence with the 1.618. So there is definitely some support down here in case price is moving to the downside and take some liquidity before we then expect price to move towards the upside. A more bullish scenario is continuation, where we have a finished triangle, and this triangle is a running triangle as wave B moved above the origin of wave A. So we then have our wave A, B, C, D, E, and an alternative to this triangle actually is that you start here with this being your A, B, C, D, and this is your E. But I'm not too big of a fan because D and E are really cramped up, like they're very, very small compared to a much bigger A, B, and C. And it is about proportions, and that is something I like to talk about as well, because look at this wave A. This wave A is almost like one candle. And then you see B, C, D, E. Much, much bigger. Proportions are important in triangles, and for me this is not ideal. Can it happen? Well, I mean, everything can happen, of course. There's never a certainty in trading, but this is not something that you actually like to see in a triangle. By actually far most common, wave A is one of the bigger wave structures, and then as the triangle continues, the waves become smaller in time and price as you condense towards the pivot, right, the end of the triangle, and then you start moving. So it does have impact on the probabilities of this particular scenario, where after E you're then looking for a 1, 2, 1, 2, and you want to see continuation. Well, we had a bit of a move to the upside over here, but clearly no continuation as we are dropping towards the downside here at the moment. If we look at an impulse, 1, 2, 1, 2, and we are potentially even looking for another 1, 2, the double 1, 2 we have over here is also not looking great, because the second wave 1, which is a lower degree wave 1, as the higher degree is the blue one, 1, 2, 3, 4, and then 5 in blue. Inside wave 3, we have the white count, 1, 2, and then 3, 4, and then eventually wave 5. So the white 1, 2 is a lower degree Elliott wave count compared to the blue 1, 2. But the white 1 here is longer in price and time compared to the blue wave 1, and that is not that common because it is a lower degree wave 1, and preferably each degree is a little bit shorter in time and price. That's your highest degree, a lower degree, and then your lowest degree, and then you eventually push towards the upside. But that is not the case over here, which does negatively impact the probabilities for this particular scenario. If price does take the high, we cannot forget about potential flat. I at least want to mention it. We're also in a flat pattern. We have then an A, B, and a wave C, but now we have a bigger wave B, right? The target is higher for your expanding flat all the way up here, 76.9k and 78.8k. But also here I do want to show you this, at least in this update video, that for a regular flat, the common target, I mentioned earlier 1 to the 105, and the reason is because we already hit it, but officially the common target is the 1 or the 0.9 to the 105, and the 0.9 has been hit in this scenario, where a wave C to the downside in this scenario would preferably move below this wave A, giving you targets below 61k, right? So that's at least something I like to inform you about. Now, more locally, we did finally see some signs of weakness. So if I go to the CVD folder that I have over here, go to the 15-minute time frame, then after the high was made, right, I mentioned yesterday in the live stream that we do on a daily basis, afternoon Central European time zone, I mentioned we want to see a range. And once the range is going to develop, we can look for signs of strength or signs of weakness. Now, I quit the live stream somewhere over here, right? And then as the night hit, I was in bed over here. So, no idea. This was all overnight for me. But then I woke up this morning, and there were some signs of weakness. First of all, bearish CVDs over here that already played out when I woke up, as I woke up somewhere over here. So signs of weakness, bearish CVD divergences over here were seen. Price moved to the downside with this move here, took the lows, therefore the bearish CVD divergences played out. Being very patient, once again, right, we want to see a move to the upside, see a move to the downside. This is where I eventually opened my eyes. And what I saw when I looked at the chart is an 886 touch. Now we know when the 886 is touched, that is a rare target for a 2, common for a B or a wave X, increasing the probabilities that price is going to take this low sooner or later. We move to the upside, bit of a range, bearish CVD divergences again locally that I can show you over here, right? So this is the area. Let me zoom out just a little bit. We're on a very low time frame. So here you can see we have a lower high on price, a higher high on the CVD. And once again, once that played out, we build more bearish CVD divergences, lower high on price, higher high on the CVD. So there are no signs of strength over here, expecting price to move to the downside, and so we do. So if we then look at the probabilities of the different scenarios, I do have a bit of a story because I like to explain myself in more detail. So in the WXY scenario, we have a less common target that is hit, which is the regular flat target over here, and the more common target usually is the expanding flat. So that is something we have to at least keep in mind. In the bull scenario, we have a triangle, right, a running triangle, which isn't that great as explained, especially because of wave A, and the double 1-2 here is not ideal, as the second wave 1 is longer in time and price compared to the higher degree blue wave 1 that you can see over here. And in the flat, it is actually not that easy to count a 3-wave structure. If we are looking for a wave B, we need either an A, B, and then a wave C to the upside, but this move to the upside looks better as a WXY, but a wave Y needs to be a 3-wave structure. It's not that easy to count a 3-waver all the way to up here, and therefore this target for a regular flat, again less common, is on my chart, right? So not ideal. All of these scenarios have some negatives. We'd also lost the support resistance area of this range. So if I show you the range again, we lost this white support resistance area after we moved above it and hit the value area high. And the bearish divergences locally and the local 886 already played out as the lows got taken. The larger 886 is also hit as shown in the beginning, right? So we did hit the larger 886 taken from the high to the low over here. So we do expect the highs to be taken sooner or later. And it is actually quite common for an 886 or after an 886 touch to also see the golden pocket hit, and that is why the 886 and the golden pocket is one of my templates here, 618 RT, where basically it says 618 retest, 886 touch, move down to the golden pocket, observe the reaction over here, which is going to be quite interesting. So currently, if I have to compare the different options, then the number one is the WXY/flat, even though we're talking about regular flats, if this already would be the high, and if we do move up, we at least have the common targets for flats above us. And then the number two is the bullish continuation. So all of these scenarios have negatives at the moment, making it difficult what to expect and really get a good idea of the probabilities per scenario. On the weekly, it's very easy, right? We still expect higher prices to come. But in the range, price is not making it easy because of the less common targets that are being hit and structures that are not ideal. A local move down on the lower time frames, that was expected. We had bearish CVDs, we had the 886. I know I'm talking in hindsight, but it is educational as well. So hopefully you learn something that next time this happens and I'm sleeping, you at least know like, hey, you know, Koen said, oh, 886 touch here, you know, there's bearish CVD, higher probability to move towards the downside, right? But now, as that already happened, I am simply patient. I'm waiting for a bit more clarity, see what price wants to do, because overall on the higher time frames, the trend is still up. We still expect 70K to be taken eventually, right? So far, we don't have locally any proof of support. Weakness is being shown. I will continue to observe what happens on the lower time frames as we now hit our first area of support, which is the previous range over here. And if price is going to move back above this support resistance area, then we might be looking for the high over here locally as well as the 74K high. So make sure you trade safe, and I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.